What's up, everybody? Jake from StratGeeks coming at you. We're going to be talking about Axios, but specifically some ways that we can use the Axios signals, which are these red arrows pointing down and these green arrows pointing up, to take some somewhat discretionary or manual trades in between the automation. So right now, let me just show you what we got so far with the automation. And the idea is to add to these profits and yeah, basically have something to do possibly in between the automated trading. So with this particular template right now, and this is a very accurate backtest. Honestly, like, I have yet to see a day so far that has not matched up with our live compared to our backtest. So I mean, let's say 90 days out of 100 or 90 trades out of 100 are going to be matching perfectly, maybe even better than that. So we can see over the last 30 days 11,280 and a max drawdown of 1,100. Best case scenario, you could even use this on a kind of a smaller prop firm account, really. 139 trade sample size, so that's great. It's over 100 trades, almost a 67% win rate. But it's kind of better than that, because if you look at the average winning trade, it's $213, and the average losing trade is $181. So we have a positive expectancy here for sure. Average trades per day, 6.7. I like the average time in market, just over 10 minutes, almost 11 minutes on a 3-minute chart using a NASDAQ micro. So yeah, let's maybe I should go over, for anybody who's new, let's go over how the strategy takes its trades with this current template with the automation, and then we'll go over for some, for those of you who are already subscribed, we'll go over some ideas on how we can take some manual trades with a little bit of discretion in between those signals. So for anybody who's not subscribed, at the time I'm making this video, we have a few spots left for our sale. If you go to the video description and just scroll down a little bit, and you'll see a link to our Discord server. Go ahead and join our Discord server. Quiet, doggy. I'm trying to make a video. Go ahead and join our Discord server and send me a message, Jake@ORS, and I will send you a link to the sale price. And you can also go to our website, StratGeeks.ai, and then just scroll a little bit down here and click this Discord link right here, and you'll get the Discord link there. All right, so let's get into it. Actually, before we do that, let's just look at the analysis of the days with this template. So I designed this template earlier today with the idea in mind of being able to use it to qualify something like a 50K account evals, maybe a couple, 2-3 times in a month. Not saying it's going to work every time, but there's a good probability that it would qualify a 50K eval maybe 2-3 times. I mean, if you look here, this would have been, it would be probably break even here. You would have been about $1,000 up by right about here. Then you would have been another 1,000 here. You might have qualified one right about here, and then certainly would have qualified another one by here. So you might have qualified 2 accounts here, and then 17. So maybe you had another 2 or 3 qualified here. It's not too many lost days in between there. So then you would have, okay, so this would cancel out that. 8 plus 12, that'd be pretty close. You might have been able to qualify at least 2, maybe 3 accounts in 30 days using this template, which is pretty freaking sweet. Let's also just look at the trades. Now our volatility started getting really, really big over the last few, it was like the last 6-7 trading days. So I'm not surprised by these bigger wins and these bigger losses. There's a little bit more mellow back here. But if we look at the cumulative net profit over the trades, we can see a really nice equity curve there. Anyway, so let's get into how this strategy takes. So I chose this day to start on purpose because this day really wouldn't have had, I'm going to go over some manual ideas after this, but this day didn't really have any of the manual ideas. This day would have been pretty much all automated. So let's look at the first trade, how the automation with these particular settings would work. These purple dashed lines are swing lows, and these blue dashed lines are swing highs. So this swing low here comes from this low right here. That wick right there. This is set to a swing 5. And you can see we took our first target here at the most recent swing. So you can set Axios up to take profits for the first position or all contracts on either using the most recent swing high or low. You can use ATR, you can use USD, you can use set tick amount. So what we've found so far is that the swing lows and highs seem to be really good. So what we need, one second, my dog's going crazy. Hold on a second. He was playing with my shoe for some reason. I've never seen him do that before. I have, I don't know if anybody remembers those shoes called Heelys. It's got like a wheel on the heel. I actually have an adult version of those that my daughter and I got a 10-year-old daughter. My daughter and I, there he goes again. Maybe there's something inside it. My daughter and I will go to the mall or something and we'll both skate around. Hold on a second. I'm not going to re-record this video. I don't know what he's doing. Hold on a second. Somehow one piece nugget of dry food, one little nugget of dry food ended up in my shoe. No idea how that happened. Which I think was his way of telling me that he wanted some extra dinner. Anyway, oh my God, where were we? Okay, so why did Axios enter this trade here? You know, for everybody who's already subscribed, you already know, but we'll just go over this real quick. So for Axios to start trading, we have to wait till 9:30. That's what this template trades from 9:30 to 12 Eastern Standard Time. To enter this first trade, we need 4 things, actually. Or you can say 3 or 4 things. With this particular template, it's actually 4 things. We need to be closing below this 9-period moving average. We need to be closing, actually we need 5 things with this one. I almost forgot. So we got a 9, let's just explain what's going on in the chart here. We have a 100-period moving average here. Comes with the strategy, with the automation. And then we got a 9-period exponential moving average. They're both exponentials. So to take a short, we need to close below the 100, and we need to close below the 9. We also need the 9 MA to be red, which is for sloping down. And then finally, we need our awesome Axios signal, this red arrow. This is our proprietary indicator. So we call this this is the actual signal itself. So number 1, closing below the 100. Number 2, closing below the 9. Number 3, we want that 9 to be red for sloping down. And then finally, the Axios red arrow. So all those tell the automation to take a short. The trade will enter at the close of this candle, and it's going to target the previous swing. So this swing here, going to target this swing, which is a swing 5. Now I've tried multiple other swings, swing 3, 5, 10. 5 just happens to be the best on the 3-minute chart, and makes sense. I've had lots of good luck with swing 5 over the years. So anyway, so our first target is going to be from the close of this candle to this swing. So it's going to be an 80 tick target. But we're also, with this particular template, we're also going to have a runner position. So here we can see, it looks like it enters here, but really it actually enters here in real time. So we have our, I don't know, about 80 tick target. And then we're going to hold the second position all the way until we get a green arrow. So the inverse of a red arrow obviously is a green arrow. And that will close at the close of this candle. When you look at it in backtest mode, it looks like it's the open of the next candle, whatever, same thing. So this trade would have been 400 or so plus 80. So 3 contracts with 80 ticks and 2 contracts with 402 ticks. And that's what it looks like here. I'll just show you. So 3 for the first position and 2 for the second position. We got all sorts of settings that we can mess around with for Axios. It's a very robust, awesome strategy. But yeah, send me a DM via the YouTube description link for joining Discord, or go to our website and join the Discord, and I'll send you the sale link. There's a couple spots left at the time making this video. Anyway, so we can reduce these for smaller accounts, and then you can actually make the max session loss left. Anyway, I went over a lot of that stuff in the previous video. I don't want to spend too much time on this. I want to get into the manual stuff. So let's look at some of that. Now, we don't really have any of it here. Now, we're just going to kind of go, I'm going to go through some trades, ideas, and some kind of brainstorming. Obviously, they're not all going to be winners. Some will be losers, some will be winners. But this is kind of what I've been looking at, possibly adding to the strategy if possible. Some of these things are actually not possible to add to the strategy. It would completely change the logic. We'd have to build a new strategy. But that's not to say we can't take some of them manually. But in this case, on this particular day, there would be no extra opportunities not within the trading time allowance from 9:30 to noon. So let's look for another day. See if we have any opportunities here. Oh yeah, this is perfect. So one idea is, the way that Axios is currently set up, with this red arrow here, we are not allowed to trade this red arrow because we're not closing below the 9 and we're not closing below the 100. But what if we had a rule where if we have a red arrow, which is for short, and it's more of a mean reversion strategy. I should explain what these lines are here. This is simply the opening range for, I've been working with opening range for quite some time. So this is the first 15 minutes. That's the high of the first 15 minutes. That's the low of the first 15 minutes. So I always like to have that on my chart just because I'm so used to seeing it. But say we are kind of hanging around in the opening range. Maybe we're not too far above it, not too far below it. Maybe we're inside it. I kind of think mean reversion strategy. So this is my idea for a mean reversion strategy. So we would wait for a red arrow in this case. And once we get a close, so once we have this red arrow, we're in a sell zone. We'll call this a sell zone all the way to this green arrow. Let's make this red so it's more obvious. I can find red. There we go. Make that a 10. Okay, so we're in our sell zone right here. But we're not allowed, with this idea, we're not allowed to enter a sell for our mean reversion strategy until we close below the 9-period moving average, and it should probably also be red for sloping down. I'm not sure about that yet. Anyway, these are ideas in progress. So we didn't, well, we're already in a trade here, and that's a loss. Actually, this was a long. So now we're in a red zone for possible shorts. Still didn't close below the moving average here. And here we close below the moving average, the 9, and we are sloping down. So we could enter a trade at the close of this candle based on our red arrow Axios short signal and target either this swing low here, which is going to be plotted on your chart for you. So again, this swing low is coming from this candle here. So you could target that swing here. You could also target the middle of the opening range. Or what I also really like is targeting the 100 period moving average as a nice mean reversion to the 100. So you'd hold that trade all the way till here. And maybe you could even do something like take the first one at the swing for 94 and then hold the second position for 258 ticks all the way to the 100 moving average. Maybe after you hit your first target at the swing, you move your stop to break even and protect profits. Something like that. Anyway, that's the idea. We could call that mean reversion from close below after Axios signal. So we would obviously only use this if we are closing below the 9 period moving average, but we're still above the 120. So let's see if we can find another example. Not in this day. So here, yeah, not. I guess you could, oh yeah, here we go. Oh, this is actually a really good example. So here, we get our Axios signal for long, and we're going to try to maybe target the middle of the opening range, maybe this swing high way up here, something. But maybe we don't know what to target until we get what we want, which is what we need is a close above the 9. Doesn't happen here, still doesn't happen. We're waiting for a close above the 9. We're still in our buy zone. This is all of our buy zone here from the close of this candle here. Just make it extra green, I guess. Now, all these trades aren't going to work, but I did go back and test the last 30 days. A lot of them do. More often than not, they do. And finally, here, that's a lot of green on the chart. Finally, we close above the 9 period moving average. It's also, we don't need this green on here, it's too much. We're nowhere in a long window because of that green arrow. So we close above our 9. And we know we can go long because our 100 is like, I don't know how to say it, targetable. So we can target if the 9 was, if the 100 rather was below, we can't go long. To go long, we actually need the 100 up here to have something to target. So we would be targeting, we'd be entering at the close of this candle, and we'd be targeting the 100. And that'd be a profit of 164. We could have even targeted the bottom of the opening range, perhaps, for 81 ticks. You could have had something like that. Let's go to another. Maybe see if I can find. I'm just going to kind of brainstorm here, meander a wee bit with the video. So here we close. We're not inside the trading window anymore, but we could still look at this. Here we close below the 100. I mean, I guess you could target the 9. But basically the idea is to look at these Axios signals because they're really, really good oftentimes. Of what could you do with this signal with just what's on your chart right now? You know, using the swings, using the opening range, and then using the moving averages that are on here. You could say, well, close below, but we never close below the 9. The main rule, you know, would be closing below the 9. So here's an example of not being able to take a short. So We close below the 9 here, but where's our 100? We can't target our 100 because it's actually above our entry. We would need the 100 down here to be able to target it. So if that's the 100, we would need to be able to go and bam, target the 100 that way. So you wouldn't be able to do that. It'll make more sense. I'll see if I can find a couple more examples. This is just a nice Axios trade after our trading window. You would have entered along here, and you would have been out. Well, see, this is another idea. Like, why not target the top of the opening range there? So often the price will end up like a magnet going to the top of the opening range. And this is like a side note. This swing right here, this swing high, look at where this entry is. This is a trade that I would avoid. I would be looking at this manually as this trade comes up. And as you get more familiar with the strategy, you'll be able to see this stuff as well. Like, I'm looking at this swing here, and I'm like looking at the Axios arrow, Axios lines here. When these lines cross, that's what creates the green arrow or the red arrow. See, it crosses here, then we get a red arrow, and it was like at the close of this candle, we're like, oh, it's about to cross. And then, bam, we cross right here. As this candle's growing, I'm looking like, oh man, our target's going to be here. As this candle's growing, maybe it looks like it's crossing, looks like it might cross, and maybe with 30 seconds left in this bar, we're like right about here, and I'm looking over here, and I'm like, geez, that's only going to be a 17 tick target. I don't like that. I don't like that trade. I don't know. I might turn the strategy off. We don't have to disable the strategy. You just turn the strategy off and maybe not take that. In this case, it would be way better just to take it. You would have hit your first target within like 2 ticks. 3 ticks, which is, not great. But your runner would have ran with 2 contracts all the way till this red arrow here for 286 ticks. Okay, so let's find another, that's just a little side quest there. Let's find another mean reversion idea here. Squeeze this back down. None of these really. Okay, here's another one. Here's another one, see? So this trade would have been a really small target here. And then we exit at the close of this candle here for a 94 tick loss. But what if you're like, oh, I want to make up for that? We get this green arrow here, which means we can take along. Our 100 moving average is way up here. We can just kind of be looking at it. It's like, oh, it's about 200 something ticks away. Just be keeping an eye on it. And then manually enter because we close above our 9. Our 9 is also green. We can manually enter along here, and we could target perhaps the bottom of the opening range. We could target this swing low right here as resistance. We could target the 100 moving average right here. So 3 different ideas on what to target just right there. And that works beautifully in that case. But here we don't close below, on the signal candle itself, we don't close below the 9 moving average. The next bar we do, even though the strategy with the automation settings we have set up right now the strategy will not take this trade. It won't take the trade unless the signal bar itself is the one that closes below the moving average. However, what I did test the heck out of was if the next bar or any subsequent bars after the red bar close below that moving average, targeting that next swing. So you could do this manually. Unfortunately, we can't get this programmed in. We'd have to develop a whole new strategy because the foundation is that I actually asked the developer to. He said we can't do it. But we can do this manually. Pretty easy to do. And I did test it. It added this exact method here. Added an extra with I think it was just 2 micros, would have added like an extra $1,000. So with 4 or 5 micros, could have added an extra like $3,000, $4,000, $5,000 to the overall 30 days. Just doing this kind of stuff manually. Here, I think this one might not be a winner. So we are closing above the 9, and we could target the 100 here, or you could target the bottom of the opening range here. Now, the stop would be if we get a red arrow. So we don't end up hitting the 100. We don't end up with anything. Now we have to exit the trade at the next red arrow signal candle. So that would have been a loss of 99 ticks. But we would have made at least 100 over here, so we'd be break even on that. Then we could have also taken this, so we'd be up 100 or 200 ticks here. And then this would have been, yeah, that would have been a valid short. That would have been a loss here. But then we did close above here, so you could, now here's another thing. You could target the green arrow, you could target the 100 here, it's like 34 ticks, then move to stop to break even. You could target the bottom of the opening range for 96, or you know, if you did that, then you also might, maybe on your second position, you might lose 61 at the red arrow there. Hopefully that's making sense. Let's maybe do one more example. Let's look at another day. Let's see here. Okay, so here's a loss. Here's a pretty big loss. Actually, before I even go over that, I wanted to another side quest here. So I'm just trying to give you all ideas on how to work with these Axios signals and what we have currently on the chart. So leading up to the open here, and I actually went and back tested this too, and this can be quite successful as well. Not all the time, obviously, but it's something to keep an eye out. So we have our red arrow put in here. We are officially in a sell zone going into the open. Here comes 9:30. Bam, 9:30, our first candle is right here. We are already in a sell zone. You could just take a short here. Short. And then hold it all the way until we get a green arrow, which would be here. So you could have entered here and then exited here. It doesn't always end up working out, but I saw it work out more often than not, actually. But then we got a green arrow here. We can't take a long because we're not closing above the 100 or the 9. If we wanted to mean revert, we could enter a long at the close of this candle because we are green and we are closing above. We could be targeting perhaps the middle of the opening range. 271 ticks, that's a pretty solid target. Otherwise, we'd be going way up here to 450. And we can see we do not hit either of those targets, and we get our red arrow candle, and we'd have to take a loss of 187 on that trade, for example. But then we enter a regular automated trade at the close of this candle, and we target our swing low here, and then we put our green arrow kicks in here. We end up a couple ticks profit on our runner. Then we have an automated trade coming in here again. So we could, yeah, so this is another loss example here. We have a green arrow. We could mean revert up to, see, I don't like the idea of mean reverting in this price action because we are continuously making lows below the opening range. Like we are kind of trending. The best mean reversions I've seen are when we're not too far out of the opening range, maybe one standard deviation. So I consider a standard deviation. I break up the opening range into 4 sections. 1. Let's make that, see if we can get that. It's not going to be perfect. 2, 3, 4. So each deviation today is 141 ticks or so. So like maybe as an idea, or even you could even say half the opening range. Like if you're not if you're already closing underneath half of the opening range, maybe we're in trend zone. Maybe you don't try the mean reversion. Just let Axios do its thing because it's going to trade the trend. But if you didn't do that, then you would have entered a mean reversion here at the close of this candle above, and then you would have had to exit here. And we wouldn't have had any more. Oh, we would have had a mean reversion here. That was just, that's just an idea. You could enter your mean reversion trade here at the close of this candle, and you could target maybe the bottom of the opening range. That's a little far away. I mean, based on our ATR right now, what's our ATR? It's like probably about 100 or so, 150. That's a big ask there. That's a big ask. But you could. But either way, even though you don't hit any of your targets, I mean, oh, and then your 100 period moving average is way up here, 500 ticks away. That's almost too far for a mean reversion strategy. But either way, your red arrow is going to close here. So either way, you're making 142 ticks out of this one. So if you don't hit your target or you don't hit your stop, just exit at, the idea is just to exit at the next red arrow. And at that point, then, oh yeah, and then we have another idea. I know I'm throwing a lot of different concepts out here, but this is just is for brainstorming. So we have our Axios signal here, but this candle, the signal candle, isn't the one that closed below the moving average. However, the next candle does. So we're in our sell window. You could manually enter a couple contracts and target this swing low. So these purple lines again are coming from this swing low right here. So you could target something like this. I don't even know. I have no idea if this is going to work or not. Bam, look at that perfectly. This does happen more often than not. I did backtest this. So you could do that. So I call this kind of like the Axios delayed method. So you just wait for whatever the next candle is to close below that 9 period moving average. We're already closing below the 100. We're in downtrend for sure. And then wherever that candle peaks out down there below, enter on that one, mark it, and then target that previous swing low. Here we could have another mean. Oh, no, we're out of the trading day. But you could have another mean reversion entry here if you wanted. Actually, this wouldn't even be a mean reversion. This would just be, oh yeah, it would. This would be a mean reversion here, and you could target this swing high maybe. But it doesn't end up working out. You end up losing 70 ticks on this one, but you would have made 250 on this one. So this would, all right, so this is actually perfect to have both of these lined up next to each other. So this would be, I consider this concept the Axios delay method, where you simply look for that red arrow. We're already closing below the 100. We got our red arrow, but we're not closing below the 9 yet. This candle does close below the 9. Go ahead and target that next swing low or a target of your choice. So we're just delayed until the candles start closing below the 9 as the last confirmation. And then this would be over here. This would be the mean reversion method, where you're not closed below the 9. You're actually trying to revert back to equilibrium as well. So we basically went over the delay method and the mean reversion method. That's probably pretty good. And we also went over a minimum target. It's like, do you really want to enter the trade if your first target is only 10 ticks and you're not using a runner? Maybe not. Yeah, and then there's like this other version of the mean trading system where you could enter. I mean, we're inside the opening range now, right? We're definitely inside. We are ranging in here. So maybe at this Axios signal, you're just like, well, we just exited this short and we're bouncing off the bottom of the opening range. Why not mean revert back to the 9? 128 ticks. I mean, this is a massive opening range day. Can you tell I like my roller tool? Almost a 900 tick opening range. So even a mean reversion back to the 9 exponential is 120 something ticks. But if you wanted to wait to mean revert until after a close above the 9, it would be this candle, and you'd be targeting. You could target the previous swing low as a resistance point. So you could draw this line out here. And you could say enter at the close above. We have our green arrow. Enter at the close above. Target that. Previous swing low. You could even target the top of the opening range. You would have missed it by 16 ticks. Then if you had a runner on this one, you would have had to exit that runner here. First, geez, even that was 72 ticks. So I hope I'm giving y'all some ideas. Then we have an automated trade here. We're closing below the 100, closing below the 9, and we got our Axios red arrow. So that would be an automated trade here. Targeting the swing low, entering here, targeting the swing low here, and we're going to hold that puppy all the way till we get the green arrow, which is here. So that's a massive trade there. Then we got a short here. We got to give some of those profits back. Enter here, and then we got to exit both positions here. So that's 262 times however many contracts you're working with there. But overall, that was a really, really good day. I think that's probably pretty good. Yeah, again, check out StratGeeks.ai. Scroll down a little bit, join the Discord server. Axios is the main strategy we're working on right now. We haven't even added it to our website, but we're really excited about it in these markets. So join our Discord link here, or even more simply, just go to the description in the YouTube video. I'll put a link to join our Discord in there. Send me a DM, and I don't know how much longer. We're probably going to not be doing the sale for much longer because Axios is kind of starting to crush it. Pretty stoked on it, especially adding in some of these concepts, doing some manual stuff here and there. Could be really good. So yeah, go to the description of the YouTube video or the website. Join the Discord, send me a DM, Jake@ORS, and then you'll know it's me. You'll see my face. This is my actual face as part of, that's my profile picture on Discord as well, Jake@ORS. All right, everybody, Jake, StratGeeks, signing out. Talk to you later.